Hello, monsters. So let's take a look at one of the things that I'm actually looking at for next week. One of the things that we need to keep in mind is that see how the crude oil is actually continues to roll over. It just gradually just moving down. It has not participated in the rally at all the entire week, even though the S&P was breaking out. That's a bearish divergence because starting from mid-February when everything was starting to rally, the S&P was rallying. I mean, for example, here is S&P futures. You see how every S&P was rallying, continuously moving higher. You had crude oil along with it moving higher. Crude oil moving along with it higher. This all broke down right around here, basically last week after 9 million barrels built that came out, and then today's inventory report basically did not do much either. Actually, yesterday's inventory report did not do much either, so it was still making lower low. Now, it may bounce right from here, this level, which is the critical piece around $36 a barrel, but if it's not able to hold this in the next week or so, we may be in trouble, and this may go all the way down to like possibly all the way down to 30 level. We don't know that exactly yet, especially if the inventory levels continue to pile in. What does that mean? We'll see if the oil stocks, follow along the crude oil. But what I want to show is what's happening in high yield. Here's this picture of high yield. Same exact example here. This thing basically ripped higher on short covering big time, and basically stalled out over here. Now, if I go to high yield chart like this one, which is from stockcharts.com, I could basically make a case that you have sort of you have another head and shoulder formation here. You have a shoulder here, a head here, and possibly shoulder formation right here. So it's critical to see if high yield is going to break down. The internals are already acting weak. So you have MACD, or going back to my Think or Sim charts. Here you have MACD rolling over. Here you have RSI rolling over. If I go back to crude oil, here you have same exact thing happening here. You have MACD rolling over. You have RSI rolling over. If crude oil is not able to hold $36 a barrel, that's the fine line. That's what you need to keep in mind. If it's not able to hold $36 level in the next week or 2 weeks, then I think that you could see the entire train that has been riding higher and possibly taking S&P higher along with it may continue to come under pressure. The reason why I bring this up is because take a look at as high yield started to come down, what happened in banks. Here is Cool and Frost. If you remember, about a couple of weeks ago I presented a bearish trade idea. My timing was absolutely horrible, but I presented a trade idea to start buying puts on all regional banks, and obviously they just ripped higher on short covering immediately after that. But here is what I'm looking at on Cool and Frost. Right here is your trend around, let's call it $54 level, and here same thing. It started to top out, made a high. The DAX subsequently did not perform with the rest of the market as S&P continued to move higher. This thing did not perform. It legged down and continuously moving down. So the entire week has gone by, and regional banks, especially the ones that have high exposure to energy markets or bad energy loans, have not performed. So this is the one that we need to keep in mind. Same thing is going on over here. We have MACD rolling over, RSI rolling over. If I go to other banks that I talk about, here's TCBI. It needs to hold this level around 36. If we go to BOKF, BOK Financial, same thing here, has not participated in the rally at all. Today it's down 1.6% while S&P is trying to hold in green. Same thing is happening here. MACD is rolling over, RSI rolling over. The simple case here is, look what happened here. MACD rolled over. Look over here, MACD rolled over again, and here again MACD is rolling over. So if this is the start of new leg lower, it's not going to give much of the warnings to the bulls, because it's just going to continue to crash and probably go back down below 50 over time. Now all this sell-off is started in regional banks. FFIN, by the way, is another one right here. This has been performing a little bit better than the others, but we'll see if MACD actually starts to roll over here. But anyways, going back to earlier this week, this all sell-off started after right here, after Bloomberg reported the following: shorts crowding into Texas banks bet energy pain isn't over. And it basically, I posted this in my chat room. Here is the chat room, our discussion on 8:37. When was that? This was on March 29th, so you can go back and take a look at it. This was from 2 days ago. And basically it was talking about how with the short interest on these stocks is rising rapidly. There was a fantastic illustration of who has the most exposure. Here's Frost, CFR, which is this stock right here, Frost, that has the high short interest. Another way to show you that, if I go here and if I just type in CFR, you'll see it has a short interest of almost 18%. How's the short interest doing? Well, let's go over here. Here's CFR. This is the short interest. Notice, even though the stock has basically rallied and now starting to stall and maybe going for a breakdown, it doesn't matter to the shorts. You know, basically at the end of last year, they had 7.2 million shares short, and the float continues to rise. Every 15 days when the report comes out, the short interest is rising. This was the last report on March 15, and we'll get another one that's going to be coming out soon. Today is March 31st. You're going to probably see this go higher again. So the bears don't care. You can look at BOKF as just as an example. Same case over here. It has basically gone up by about 70-80%. The short float has increased by 70-80% since the end of the year. So here's 3.9 million shares. Here's now 5 million shares. What is the short interest in BOKF? Let's go over here. Now it's 19.9%. And so, you know, here's you have basically the Bloomberg article confirming what we have been talking about for a while. To give you further perspective on this, here is my note from February 24 that I posted in the chat room. And basically what is this talking about? It's talking about, I showed a note from Bank of America. So if you go to, if you can probably dig my note from February 24, just go to the chat room and you'll see the link over there. According to Bank of America, it is the second, we're talking about CFR here, it is the second worst bank with highest energy exposure to bad energy loans. And I mentioned after that, it is hard to quantify exactly how many of these loans will go bad and what will be the net impact on the capital ratios. But right here is another example. You got a bunch of these banks, TCBIs right here, CFR, FHIN, bunch of these banks that all have heavy exposure to the bad energy loan. Another way to oh my God, I hate that. Anyways, here's another example. This one I showed back on January 13. Same example over here. Energy loans as a percentage of total loans right here. You will see this. This is the percentage of their total portfolio. CFR is all the way here. BOKF is all the way here, almost at 20%. I can't imagine these stocks can sustain any rally in a long run with the energy coming down and high yield possibly starting to roll over again. Here's another chart. All this is recorded in Market Digest, or you can just go to my chat room details and find over here. Now, one thing I want to mention is that many people will mistake with the idea, hey, but the crude oil, maybe it's at a level, it is not at 26, it has come back, so maybe the bad energy loans are not so bad. Not quite. Let me just explain quickly my reasoning over here. You see the break-even points for a lot of shale gas companies based in Dakotas and Texas, and a lot of these have break-even points that's all the way out here, $50, $55, $60 a barrel. I mean, the crude oil doesn't matter. It has gone from 26 to 40 something and then retraced a little bit. Unless we make a case that crude oil is going all the way back to 60 plus, none of them are going to make money. I mean, literally none of them are going to make money. I mean, I'll just show you a quick example. Here's Pioneer Natural Resources, PXD, which has done quite well. It's coming out of February low. But I mean, you can just see right here, if I just show you the earnings projections, I mean, the crude oil may have come all the way back, but this is a $140 stock that loses money now every single quarter. This has gone to, from making $4 to $5 earnings per share every year to now losing money with a negative EPS every single year. And it's not going to change, even though if the cost of drilling is coming down, that's not going to change, unless the crude oil actually, goes back all the way to, their break-even points, which is 55 and plus for 90% of the companies out there. So this oil rally does not mean anything, and it has done the carnage that we wanted to see in the high yield market already. So here's the bottom line. If you see for any reason, because high yield is no longer participating with the rest of the broad market rally, it is starting to roll over, and we are starting to see bearish divergences in MACD and RSI. If you start to see crude oil start to roll over or high yield start to roll over, the spot where you're going to see some serious carnage, in my opinion, are going to be these stocks: Cullen/Frost, CFR, BOKF. Right here, look at this ugly candle. Looks like it's going to break down probably tomorrow, or maybe in the next early week. It's probably going to go straight down. This is BOKF, or you're going to see in TCBI right here. We'll see if it breaks down from this level around $36 a level. Is right down 38.40, and FFIN, which has done better than the others, but see all this congestion area. Look at all these volume over price resistances right here coming up around $30 a level. So probably another stock for a good short entry. You can just short it right here, or basically buy puts with a hard stop, because I see this is struggling to cross through all of this congestion area without significant rally in high yield or crude oil. So keep an eye on this entire sector going into next week. I think all you need is basically another whack to the entire sector, maybe another article from Bloomberg or Wall Street Journal about bearish bets rising, piling on Texas-based bank, and you could see this entire sector basically roll over. CFR and BOKF, in my opinion, are the two that have the ugliest looking charts as they start to roll over. So that's what I have, and this is for next week, so keep an eye on this going forward. Okay, thank you.